Welcome everyone to this week's Gold and Silver Club end of week review for the 20th of June 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for commodities, gold, silver, oil, natural gas and coffee, amongst other agricultural commodities. We'll be looking at the top trades of the week. We'll cover live markets, commentary and technical analysis. We'll look at the week ahead, so key events looking forward. And of course, we'll be answering any questions you may have on today's call. So first of all, gold price this week, we've seen a huge surge in price over really the last 24 hours or so. A huge spike, over 400-point move, which I'll talk you through. So gold price soared to a 9-week high after the FOMC statement. Gold price surged by 4% on Thursday to record its best one-day move in 8 months following the FOMC statement and continued tensions in the Middle East, which helped to boost the safe haven demand. Following the release of the highly anticipated FOMC statement on Wednesday, the US Federal Reserve signaled it would not raise interest rates anytime soon, which it disappointed traders who were expecting hints of policy tightening. But the Fed also slashed its forecast for 2014 economic growth to a range of 2.1% to 2.3% compared to its March forecast of 2.8 to 3%, which suggested that the US economy is estimated to grow at a slightly slower pace than previously expected. So these comments from the Federal Reserve, combined with the intensifying geopolitical tensions in Iraq and Ukraine, rekindled traders' appetites for the precious metals. Gold price soared to its highest level in more than 2 months, from $1,268 an ounce prior to the FOMC statement, running to $1,321 an ounce by Thursday, just yesterday, for a gain of 4% in less than 24 hours, while silver jumped to a 3-month high, climbing 5% to boost its biggest one-day gain in 4 months. So in other precious metal market, platinum also rose 1.6% to $1,467 an ounce, and palladium gained 1.5% to $835 an ounce. Both metals traded near 1-week highs as the mining strikes in South Africa continue, as mining companies and workers failed to reach a deal to end the country's longest and costliest mining strike. So we've had certainly some huge moves on the precious metals in the last 24 hours. Right, before we go into the technicals, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and regularly contribute to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications who have appeared frequently on financial television. So that's some background on the Gold and Silver Club for those of you who are new to today's weekly summary. And if we take a look at the gold price right now, we're currently trading just shy of yesterday's highs. We're at $1,310 an ounce. So we'll take a look at that very shortly on the charts. We'll look at the next key levels, which we expect gold to potentially move to. The top trades of the week using the Gold and Silver Club signature trading strategies. Well, of course, we've had some great trades on the metals this week. So platinum, we had a great setup earlier on this week on Tuesday, which was a 100-point risk on the trade, $1,000 for each lot traded. We hit our profit target yesterday, 300 points for $3,000 profit for each lot traded, for a 3-to-1 risk to reward. We also had a lovely trade on Palladium from earlier on this week when we came down to a major trend channel. This risk was 75 points. Each lot traded $750. Risk for 180 points. Profit $1,800 for a 2-to-1. And of course, yesterday we had a fantastic trade from the FOMC on Wednesday. The risk on the trade was 100 points, and we delivered, came up right up to our trend line profit target at 390 points there. So $3,900 profit for each lot traded for a 4-to-1 on the gold breakout. And we'll look at the technicals very shortly as well. In fact, we'll do that now. We'll move over to the technicals and see how the markets are closing or looking as we open for the US this afternoon and how they're going to close for the week ahead. Okay, so let's just make sure you can see my screen. Okay, perfect. So the first chart we just start off with here is the platinum market. So platinum at the moment, I just want to point out we've got a very clear trending channel at the moment on platinum, which we came down to again and tested just earlier on this week. On Monday, we tested it. On Tuesday was our opportunity to get in off this. We've just had a move back towards the upper end of this resistance channel again. We're starting to see some profit taken this morning, hit our profit target yesterday. We've had a lovely move on platinum. If we just zoom out a little bit, we are continuing to stay within a nice, strong upward trending channel on platinum at the moment. And until things get resolved in South Africa, certainly with the mining strikes, we could see just further upside here for platinum in 2014. So we'll see how we're going to close the week today. But we are anticipating just a continuation of this upward trend at the moment. Very similar story with Palladium as well. We came down, we tested a major trend channel earlier on this week, found some key support at that level. We've also had a nice breakout, 180-point breakout. Seeing a bit of profit taking again just today after yesterday's huge move that we had across all the precious metals, but we're still continuing to stay within this nice, strong upward trending channel. Now, if we take a look, we'll take a look at copper. Copper is a great market. We've actually had a nice breakout today. We had a nice V-shaped reversal pattern. We've broken out of that at the 3.0738 level. You can see previously we bottomed out at the beginning of March here. We had a very strong upward trending channel. We came down, we bottomed at a nice clear round number here, 3.00. We found support around that key level, and we've just started to get a breakout today above 3.038. So I'll be looking for a nice solid move here, potentially back up to the highs here of May if we get a continuation over the month of end of June and July. Typically, copper does tend to bottom out over the month of June. We see a nice rally as we go into July and August. So this is seeing seasonality play out quite well. So I'll be looking for a nice breakout to the upside here and the swing trade here on copper at the moment. If we move over to gold, gold, of course, has been the key market which has been in play. We had a lovely move. This is where the price was just sitting after the FOMC announcement, had a breakout yesterday, huge move to the upside, over 400-point breakout. If you actually zoom out on the gold market, you actually see very clearly where we actually found resistance. So if you think, why did we bounce off the 1321 yesterday? There's no real key resistance there. What you want to do is just zoom out on your chart, and you just want to draw a very clear trend line, take down the highs here, just connect them, and you will see the market actually bounced off 1, 2, 3, fourth bounce off the 1321, this key trend line. And this is where the market, in fact, found resistance last night. And we've come spot on, hit that 1321, seen some profit taking today. We may see some reduced volatility on gold after such a huge move yesterday. We got above some key levels, so there probably won't be too much of a pullback at the moment, as we're really in bullish mode now on gold, as it's managed to clear a lot of technical and key moving averages at the moment. So we're probably going to consolidate around the 1300 to 1321, and we'll be looking for a breakout above 1321 here as we go into next week. That will be the next key area for us to enter into further positions as we go into the next week, 23rd of June next week. So gold, just a tremendous move, and I hope some of you caught the move that we got post FOMC. Silver also benefited hugely. We eventually broke out of this downward trending channel. We had a lovely break above the $20 an ounce level actually just yesterday. If I just take you down to my chart, you can have a look at that. So we came at a nice break of the 1990 actually was the trig point, where we broke just above that nice psychological round number of 20 and had just under 100-point move yesterday, came up to 2092. Lovely little breakout. Again, on the daily, we're just seeing the market consolidate, holding on to its gains pretty well, in all honesty. If it was a non-farm payroll announcement, often we can get a big retracement, but not so much on Federal Reserve announcements. We look like we're going to hold on to the gains again. Silver's broken out of a very key downward trending channel. It's above all of its key moving averages at the moment, and we could see the momentum pick up as we come into July and August here. But I think for today, we'll just get a consolidation and further opportunities to trade copper for some more lucrative breakouts as we go into next week again. If you look at the US dollar index sold off quite heavily post FOMC. We started to see it sell off during the FOMC announcement. It's come down, found support just around the 80.22 level here. We've had an upward trending channel. We've come down. We've retested the support zone here. A little bit of a hammer forming yesterday and today as well. If that triggers back to the upside, could put a little bit of pressure on the metals as we go into the US Open today. But we have had a nice pullback here. I think if we do break lower here as we go into next week on the US dollar index, we could see quite a decent move, certainly down to around about the 79.90 level. We could see the next key move and a breakdown towards that level. So what I'd be looking out for if we get a breakdown. If we get a break to the upside, be just looking at profit targets back up to the key resistance levels just above here at the 81 level. Right, and let's have a look. We'll move over to oil. Oil looking very interesting. We've had some decent surges this week. The volatility from last week we had some huge spikes, obviously, on Iraq. This week, we've really slowed down. The volatility has slowed down a lot over the course of the week. We've only really moved about 150 points, whereas last week, the volatility was 500 points. So you can see the market's a bit indecisive at the moment. I suspect we'll get a better breakout as we go into next week. You can see we came and retested the 105, which was resistance going back to February. We came down. We've retested that just earlier on today. And yesterday we've got a lot of indecision here on the market. So we're either looking for a breakdown of 105 level, come down and test the lower end of this. We've got a nice trend channel on oil at the moment, certainly on light sweet crude oil, WTI crude oil. We've got this nice trend channel forming. If we get a break of 105, we get a nice decent 100 to 200 point move lower. If we can break the upper resistance here on oil, so we get a break above the 106.82 level and break out of this trend channel, we've got quite a way to go until we encounter some major resistance. So we could really be on for a decent breakout. So whilst we continue to consolidate, I'll be looking for opportunities we've had some buy opportunities around the 105 level already. Now I'd like to see the market, if it gets a continued break above 106.82, and for a reversal, I want to see it break 105. If we move over to Brent Crude oil actually already broke out earlier on this week. We had a decent 100-point move, very clear trend channel on Brent as well. Seems to be holding on to its game just above the 114 level here, 114.82. I'd say the next key level you want to break above is 115.73 for a move to 117 is the next real key resistance level. A bit of an inverse hammer formed on the daily yesterday. Bit of indecision in the market, still holding on to its gains, but very much oil reacts very quickly at the moment to any major news coming out of the Middle East, particularly from Iraq, and we could see further just breakouts to the upside on that. So definitely one to watch at the moment, both WTI and crude oil. Once we start seeing a surge, often we can get a really decent breakout over the US session. So you do want to watch out for that. If we take a quick look at the agriculture markets as well, just take a look at wheat. So wheat still staying in its downward trending channel here. We've been in this downward trending channel since we sold off the beginning of May. Coming into a little bit of a support zone here, but whilst we still stay with this downward trending channel, there still are opportunities to maintain the downtrend here and maintain sell positions. If you have a look at corn did retrace yesterday. Decent move across all the commodities. It's come up to resistance zone at the 450 level. We've seen a little bit of an inverse hammer forming actually on the daily at the moment. We'll see whether we just get a continuation in the overall downward trend that we've got here again on the agricultural markets, which have been in really, again, going back to the beginning of May. So we may see that rotate lower again and offer a good opportunity to get in for a sell short. And coffee as well. Coffee came down, retested a major level of support just yesterday around the 165 level. If we zoom out here, you'll see that was a major breakout area previously. It's been tested a few times going back to the beginning of March. You can see we broke down yesterday. We've reversed. We've closed back above that support line, but we have got a very clear downward trending channel here on coffee as well, which if we can get a close below this key level of support, the 165 level, we can see just coffee start to break down more here. So that's what I'd be looking looking out for unless we break above the high of the trend channel. So we've got certainly a lot to look at. There's been a lot of profits this week, certainly on the precious metals. And I think as we go into next week, we're going to get continued volatility, more opportunities. And I'll definitely be watching out for the energies today, agriculture. Well, actually, all of the commodities are worth keeping an eye on, particularly gold today, to see where we close the week. Very keen to see how we are going to close. Right, just check. I think we've got a couple of questions. Okay, fantastic. So your audio is working okay, Majid? Okay, super. Right, what we'll do, we'll go over to the key news announcements as we go into the week ahead. Right, so what key news is going to affect? So we're going to the 6 major announcements which will affect the markets as we go into next week. So first of all, on Monday, the 23rd of June at 3 p.m. BST and 10 a.m. Eastern Time, we have the US existing home sales. So existing home sales measure the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing market and is a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. That will definitely inversely affect gold and silver. As we go into Tuesday next week, we have Tuesday, the 24th of June, 3 p.m. BST, 10 a.m. Eastern Time, the CB Consumer Confidence. So that report measures the level of consumer confidence in economic activity. It's a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. High readings point to high consumer optimism. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. That will definitely affect gold and silver. Next Wednesday at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US core durable goods. That report measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. So a high reading indicates increased manufacturing activity. A higher reading, higher than expected reading, should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. Also, towards the end of next week, we've got the US crude oil inventories. That's on Wednesday, the 25th of June, 3:30 p.m. BST, 10:30 a.m. Eastern Time. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Next Thursday, the 26th of June at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It's the earliest US economic data, and the week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And next Thursday, the 26th of June, we, of course, at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US natural gas storage. So the Energy Information Administration, the EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. So let me just go back one slide. You can just quickly jot those down. So US existing home sales, CB consumer confidence, US core durable goods. We've got US crude oil inventories, US initial jobless claims, and US natural gas storage. Okay, fantastic. Right, just going back to, so we've got a couple of questions on that from Majid and from Molsto. Yeah, absolutely, guys. If you would like to find out more about the indicators we use at the Gold and Silver Club, all the key technical levels that we are looking at, especially on next profit targets for the precious metals, particularly gold, you can certainly find out more, learn to trade commodities with the Gold and Silver Club. Courses are available, of course, at our international training centers and online. So I'll give you those details here. You can just very simply request more information on our upcoming programs, our live trading room, get exactly the same charts for the Gold and Silver Club to with all our indicators. You can contact us at either the Hong Kong office, Budapest, Johannesburg, New York, or our London office. Okay, so those are the key numbers to get in touch, and do make sure as well. So for the key levels and for the analysis for the following week, make sure you subscribe to our newsletter. You'll get the free weekly report. We'll be covering precious metals, energies, and agriculture. Have live market analysis, our predictions for the week ahead as well. So do make sure you subscribe to that, guys, and that will answer all of your questions. Okay, super. So with that, I wish you good luck for the rest of the day's trading, and well done to everybody who caught the breakouts that we've had this week on the precious metals. And we definitely look forward to see you back here same time next week. Okay, take care, everyone, and we'll see you on the next one. And thanks to FX Street and the team for putting on today's webinar. Thanks, guys. Bye-bye.